Hey there, lattes. Welcome back. Cindy Leader here. Today, I wanted to talk about something called risk on, risk off. It's a newer term for me the past few months, just delving into the fundamental world. So I want to talk about that because it's important to understand as investors, right? We're investors. All right. So what does this term mean? Okay, it's a term used in the financial world by investors. Like I said, we are investing our time and our money into the markets, financial markets. So we need to understand the flow of money. We need to understand what that means. Okay, it's important because it's our money, right? Not messing around here. This is our money that we're like putting out there, and we're not hoping for the best. We have to understand. So risk off, risk on management. What does that mean? It's a strategy really based on the investor's mindset toward risk and how the investor deals with the markets when they're most volatile. And man, past couple of years, they certainly have been volatile. So, you want to have that balance. Maybe not even so much balance. You want to have your money in spaces where it's growing. And then when there's a shift in the financial markets, you want to get your money to a different place where it's growing, because there's going to be that shift where sometimes your money's doing well here and then it starts to do well over here, and you want to not remain here. You want to get your money where it's going to earn the most interest for you, where you're going to get the most bang for your buck. The financial markets are always moving. Money is always moving. I talk about this all the time. Money's always breathing, like we're breathing, like the candles are moving, like time is moving, like water, like wind. Okay. Money is also never stagnant. And so we want to understand and want to take advantage of that. And it behooves you to understand where to keep money so that it's not going to lose its value. It's not going to lose as much value. So let's talk about these two things. Risk on investing happens when there's economic growth. It just means that you're placing your money in higher risk investments like stocks, which are also called equities. You're placing your money in the stock market where you will potentially make more money quicker. And if you're a trader, that's when the indices are up, when NAS 100, SPX 500, US 30, also known as Dow Jones, but as traders, we call it US 30. That's where your money might want to be as a trader. Okay. But in stocks and equity, if Facebook Meta stock is going up, wouldn't it be nice to have some of that so you can ride that up? And as you know, as traders, you can make money riding up and riding down in price. So that's like doubly good. Okay. Risk on investors take higher risks, okay, to get higher returns. It's kind of based on how the market's kind of feeling at that time. When there's news in the market and it's good news, stocks will be up. Indices and stocks will be up. Amazon and Google, they'll be swing to the upside, hence making them a more attractive place to be. So what's risk off, Cindy? Risk off. Risk off happens when there's an economic decline. Okay, you want to put your money in lower risk investments like bonds and treasuries and CDs, certificates of deposit, where there's a time on how the banks, the financial markets will hold your money, and they're going to pay you a set steady interest on that. And sometimes that interest is like, whew, that's not going to change. The downside to that is that they're holding it. If you purchase any of those, it might be a 3-month or a 6-month, or maybe it's a 10-month or a 2-year or a 10-year or even a 30-year bond. I mean, that's like really stocking your money away. But bonds are a safe place when the stock market is going down. Okay. Bonds up, risk off. All right. When you put your money into the stock market, riskier, risk on, but you have the potential to making more money there. I personally do both. I do all of that. I have the advantage of having some capital that I'm not using. You know, guys, we work for money. You're always working for money. You want to make your money work for you, even if it's $100. You know, where is it? You know, my personal story, just 2 weeks ago, I now have, because of Lattes and More, it's LLC'd, I have a business account. I have a business checking with Bank of America under Lattes and More Trading, and also a business savings. And now I did the business savings on my own, because honestly, full transparency, I'm taking the monthly subscription. I'm like, okay, into my business checking account. Well, business checking, like any checking, making nothing, just sitting there stagnant. Might as well be in that tin can buried in the backyard. So I opened up a checking account thinking, oh, I'll get some interest on it. Like it's still in the bank under Lattes and More, business trading. Let's make some interest. Okay, 2 months of that I was done, because just got off the phone with the bank last week. You know, their savings rate is 0.001%. So my $1,900 in change, let's call it $2,000 in my savings. Ooh, this is great. 2 cents. 2 cents last month. And the bank is charging me $10 to manage it. I got on the phone with them, like, I don't want this. So like, they couldn't say, yeah, I don't know why you did that. Yeah, it's not a good investment place. I don't know. It's the opposite of risk off. I mean, it was just no money to be made. So risk off is when you're putting your money in a safer place to earn like a set percentage of interest, because you know maybe you're not going to need that money for 3, 6, 9 months, something like that. So when bonds start to drop, when those rates drop, that's when you want to successfully get your money out of bonds, because the rates are dropping. And when that happens, stocks are generally going up, and then you would switch to risk on. So you want to kind of understand that the ebb and flow of that. You know, why would you invest in the stock market when you're guaranteed a certain percentage over a short term of time, 10 months, maybe it's 12 months, risk off. So I wanted you to understand that. And I'm hoping as you progress through my Patreon, that you're finding value in something like this. And I hope to continue to grow with you as we continue to move on. And I appreciate you guys. I just got stuck in something. There we go. So I hope that helped. You might hear that term, risk on, risk off. And now you know a little bit about it. You want to make your money grow. You want to keep it in a place when you're not using it that it's going to grow. That's it. Hope that helped. Talk to you later. Bye.